live on the virtual trading floor. And let's start with our disclosure. I'm associate member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA SIPC. You should carefully consider if trading is suitable for you in light of your own financial condition. And all of my trades are placed through T3 Trading Group, which again is a FINRA registered broker-dealer. Still the same position disclosure. I'm actually really happy with how some of these stocks held up today. Let's talk about it. So man, today was one of the worst days I've ever seen in my entire career for the market. You know, it's very different. A lot of the worst days I ever saw in my career were in the COVID crash. But it was very different. The COVID crash was very different. On a percentage basis, I know we were dealing with days where the market was getting halted and was down, 7%. We haven't seen a 7% down day in this market environment, but this is just different. Like, COVID was just a series of, oh my God, what do we do? Panic, 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 sell, massive volatility, huge bounce, huge down move, huge bounce, huge down move, Fed pivots, it's over. This has just been so sustained. That's really the difference. And I've still got here my pre-market chart of the SPYs up because for the day. Because this downward slope started pre-market and never ended. This sell-off at 11 o'clock was crazy. I logged into my computer, I think, at exactly 6 a.m. this morning, right at the pre-market high. From the moment I logged in, it was just, yeah. I'm seeing Pat out of the corner of my eye. I would think this is really more like the dot-com bubble unwind. I was busy watching SpongeBob during that time, and I agree with you. We could talk about that more, too. We've been talking about that. We can talk about it more. But anyway, this intraday sell-off in the SPYs is just absolutely, totally bonkers. SPYs are down over 4% right now on the day. And we're down after hours because Cisco coming through with an extra punch in the gut. Just when you're like, how could it get worse? Cisco's like, I got worse. I got worse for you. Here we go. You know that revenue growth guidance? You were looking for like 5.5 to 6.5%. How about we give you 2 to 3%? Let's cut our guidance in half. Well, that'll scare the market further. So right now I'm looking at the SPYs here down 4.3%. The Qs all 5.25%. IWM. What the hell is that noise? IWM also down 4%. So just so bad. Look at Cisco after hours. Woo! Look at this candle in the SPYs. And like Pat saying, it's a day one. Day one. Usually day one's followed by day two. Sometimes even day 3. Oh my God! New yearly close for the SPYs. Lows. New yearly low close for the SPYs. If I'm saying that right. Not an absolute low. That bottom on Thursday of last week was at 385. We're not there yet. I think bear market officially is about 383. So we're just about there. Just when everyone's looking for the bear market rally, well, I guess this was it. Little bear market rally from extended territory right back into this equilibrium zone. Then we held the trend line and worked our way down. I'm surprised at the way this pivot was formed, to be honest. And I think that's the thing that caught me off guard today. I'm not missing any new news today, right? There's nothing new since Jerome Powell was talking yesterday. I don't think so. So the thing that caught me off guard is not selling, right? We're in a bear market. The thing that caught me off guard is the way we sold after the way we closed yesterday. You know, we closed at highs yesterday. Yesterday was what seemed like a really important battle. Can I bring this chart down? Weird. Yesterday seemed like a really important battle for the market that ended up in favor of the bulls. Right, look at the shape of this daily candle, right? We're all wondering yesterday morning when we initially traded down and lost this 406 and the market was coming down to lows here like yesterday. If we close weak yesterday, then clearly we've got our next lower high for the market. But we didn't. We didn't close weak. The bulls really came in and took what seemed like a stand, albeit on low volume, where we had this pivot. We called out the low of the day yesterday, and we closed on highs. I wouldn't consider this to be a hanging man candle in this location. Not I don't know. I get maybe. Today was like 5.5. Is that this day? Yeah, it was. Jerome Powell spoke. Yeah, it's usually at the top. Which I guess you could make an argument that this is a pivot high, so it is a short-term top. But it's just not. This is not the candle that I'm expecting to see shape-wise and see the bulls close with us being in control yesterday to then lead to this candle. I really thought that with OpEx coming in this week, I didn't necessarily think that we were going to be able to do a massive squeeze higher, but I thought that it was going to at least put in a floor on the downside through the week. Well, that thought process was wrong. One of the things that we did well, did this Bath and Body Works just totally miss also? Oh my god. BBWI down 14% here initially. Whew. Oh man, their guidance is trash. They missed this. Oh my god. Just no salvation for this market at all. Yeah, I really thought that the OpEx was going to put at least a short-term floor into this market as those hedges kind of get unwound, and the amount of put flow that we saw today was so insane. Like Pat was saying, the bearish option flow is how I should describe it. The bearish option flow started when the market opened and ended when the market ended. There was just no stopping it. This market here was just totally trashed. And again, I think I got thrown off by a combination of how we closed yesterday, plus my thought process that the OpEx of this week would have at least a temporary floor in the market. We've all been saying that this is probably a low, but not the low, right? That's kind of what we've been saying even into this bounce. But the question, and what I was also saying like in yesterday's afternoon meeting, is that it's not really a when we have a pivot back down, or I should say it's not really an if, it's more like a where, right? Because the way market dynamics were coming into this week, I'm not necessarily predicting a bounce back like what we saw in the second half of March, but there was a lot of dry powder out there for one of these real solid bear market squeezes to bring us up further than where we actually went. And again, that dry powder I thought would be at least enough to have us with a floor on the week. And that just obviously has now proven to be wrong. We haven't technically broken this absolute pivot low yet for the market from last Thursday, which is 385. But we closed at absolute lows here. So today, I don't know, just totally insane. And even with how insane today was, we probably didn't do a fantastic job capturing the short side of the market. I think that was made difficult by the way we kind of had a gap and go, which is notable. Pat keeps pointing out correctly that these 1% plus gap down days are leading to gap and goes to the downside every time, and today was no exception to that. We gapped down over 1%, and then there was just no looking back from kind of the pre-market. But even with that, we actually caught some fantastic little longs today. First in certain relatively strong stocks. So the one thing that we said in the morning meeting was, let's pay attention to yesterday's low as an area to potentially be long versus. And you can see that even with the SPYs here. Try to be long versus yesterday's low because of the pivot and the way that bulls came in and defended it. That's a significant point. And if we lose yesterday's low, then you got to watch out. So the first thought process, because we're having a large common gap to the downside, but still above yesterday's low, my first thought process was longs versus yesterday's low. And specifically, I wanted to do it in what the market would show me relative strength on after the market opened. That's particularly what I was looking at. So I don't even hate the idea of, if anybody was trying to be, long SPYs off the open versus yesterday's low, just very quickly you're getting yourself stopped out. And we also, very quickly when the market opened, we were able to identify something that is still also actually shocking to me, is just how relatively strong the growth stocks were today. The growth stocks are so volatile, right? They have such high betas that usually whatever the Qs are down, you can just almost just double it and expect that that's where your growth stocks are going to be. And then pick your growth stock, right? Whether you're talking about a Robinhood or a Palantir or a Pinterest or, a Path or any ARC stock or, any of those types of stocks, whatever your Qs are down, double it. And you'll probably see how much those are down. And that's actually not what played out at all today. I think it's really kind of crazy almost and interesting just how well these growth stocks held in. We identified, and again, shout out to Jerome in the morning meeting today, bringing some really good charts to the table. He brought, I think, PAGs to the table as a potential long through yesterday's high. He brought Affirm to the table as a potential long through yesterday's high. And eventually the market got to these, but look at the trade here. This Affirm was amazing. And, still closed down 3.5%. But again, your Qs are down 5%. This thing should be down 12% today. 15% today. It's down 3.5% today and spent most of the day green. Look at this opening upside momentum in this volume. The trade through yesterday's high was great. If you missed that, we had a call out off of this low here at 940. That worked great. If you missed that, we had a call out off of this low here at 955. That worked great. This thing looked phenomenal, and a bunch of you guys were in it. And then the market eventually got to it because at a certain point, it doesn't matter how relatively strong your stock is going to be. PAGs there was another one that just went with momentum right off the open that broke and went, and then we called out a second long off of this pivot here as that kind of broke higher. So a couple really good trades there. SoFi was a focus for me. SoFi is green today. This thing should be down 15% today. It's green. I look at the SoFi chart. It doesn't look like the market even did anything today. It's actually kind of mind-boggling. This thing wanted to be so strong today, and was just another thing that turned out to be a great focus. Upstart, same thing. How is Upstart positive? I don't understand how Upstart's up 2% on its first test of the 80 MA after this gap down. But we were able to identify this relative strength and actually take advantage of it, which is Roblox. Did Roblox close green? Or did they finally get Roblox up 1%? How? These things should be breaking this mid-May low at this point. So I don't know. I think it's notable. You got to be very cautious because eventually they'll bring these back down too if they just continue to sell everything the way that they're selling it. FSR out of day 2 today. Yeah. Again, got to be cautious because eventually they're going to sell these things down again also. But it's interesting to me that this led the market down, and now they're starting to actually hold up a little bit better as they really sell off the other things where they can still get cash. It almost seems like these growth stocks that are down 90% at this point. I think Upstart is down 95% from its highs or something down to the low. It almost seems like there's just no one left to sell them, to be honest. Anybody that was going to sell them sold them, and that's kind of it. And now the market's going to other places to be able to raise their money. But those other places are the spots that actually move the S&P and the NASDAQ. Because it's also notable, I think, that this IWM daily chart is not the end of the world right now. Not a great looking candle for sure, but we're still $7 above this low in a $170 ETF. And again, this 170 area is a massive support area from pre-COVID. So I think it's hugely important. But to me, it's crazy to say this. IWM is down 3.7, 3.75% today. And I'm saying this is the relatively strong index. I actually think it's notable because the IWM has really become the most important index. It's what led us down starting in November. It led us up initially kind of in March when it started holding in better. Then when we lost that relative strength here starting on April 5th, that was when the whole market really began to deteriorate. It led us all the way down, and now once again in this area is starting to show some strength again. So I think that's notable, but look at this market. It's trying to raise cash. Look at this XLP chart. The consumer staples chart to me blows my mind. I wish I had my camera on so you guys could see my facial expressions for today's afternoon meeting. But I should be getting that again going soon. I'm in my apartment. Apartment's a little bit of a mess, to be honest. It's not terrible, but I gotta try to clean it up. It's small. But this XLP daily candle today, it absolutely blows my mind. And I know, Target really dampened sentiment today. Target had this huge gap down today, but Target didn't trade down intraday from it. And I had a good day trade in Target today. I bought back through 160 or even before 160 and caught this kind of bounce here, and eventually the market got to this too and made new lows and kind of stopped me out. So I know Target. I know Walmart here. Just oh man, this was insane. Also, what Walmart's daily chart looks like right now? Look at the Walmart daily chart. Excuse me. This is just bonkers. I don't know. Am I even doing an afternoon meeting today, or am I doing like a? It's like we're at the zoo, look, honey, there's the alligators. Look at the chimpanzees. I'm almost just having like I'm taking you guys through the zoo today instead of doing an afternoon meeting where we provide information or funeral service, says Pat. This Walmart chart is exhibit B at the zoo here. Unbelievable. This XLP intraday chart. They're just raising cash from wherever they can, and down 7%. The entire move is basically intraday. This has been the defensive sector, right? This has been what's holding up best in this market. XLP not in a bear market. Was rallying here for parts of this year. They're just raising cash everywhere they can, and that's what's happening. The big things that are bringing this market down right now: Apple, Microsoft, even still Amazon. Amazon's off 8% today. Excuse me? Exhibit D at the stock market zoo today. This Amazon chart is bonkers. But this is where the money is. This is where the money is. And at this point the market's going into we got to raise money. We already raised all the money that we can, I guess, out of those spec growth stocks that are now 90%. Got nothing left to sell in VRM here at $1.30. So I got to go somewhere else. And we're taking our money out of Apple. We're taking our money out of XLP. The Amazon split is coming up soon. We had seen an analyst come out with a price target that I thought was wacky, and you guys know I'm usually not a big fan of sell-side analyst research, but back in here, an analyst came out with a $95 price target on Apple. And look, I'm an eternal bull on Apple, and I'm an eternal bull on Microsoft. Microsoft's my favorite company in the market. It doesn't mean these stocks can't come down. And you got to recognize with Apple, so what does an increase in interest rates do? It creates multiple compression. Well, how most of the last 100% gain in Apple is multiple expansion. It's really not unrealistic to see Apple retest $100. I'm not here calling for that. You guys know I don't like to make the really big broad calls. I save that for the idiot that wants to get on CNBC and say that the market's going down 125% and make these brand calls because CNBC is about entertainment. I'm not here to entertain you guys, even if I can be a little entertaining once in a while. I'm really here to provide you guys with value. I'm not here to predict that Apple is going to go to $100. I don't make those grand gestures, but you do have to recognize that in an environment where if we were to go into a recession, if the market's multiple were to go down to 15x, that it is possible for even a company like Apple to be at $100, and then you buy it. Because Apple's not going anywhere, Microsoft's not going anywhere. Like these but the flip side of it is, I'm still not 100% convinced on a recession, and if there is a recession, I think it's going to be a very unique recession from anything that we've really seen in the past. How do you have a recession? Like what type of recession is it when there are 12 million jobs available and 6 million job seekers? All right, so that gets compressed a little bit. We got 9 million jobs available for 6 million job seekers. Is that like the point that we potentially get to? You know what I mean? So, and at the same time, is Apple stopping their buyback right now? Is Google stopping their buyback right now? They're not. These companies have so much cash. Do you guys remember? Because this also blew my mind. It was back in I think it was the summer of 2020. Because I remember being in Buffalo, Wyoming, when they did a bond offering and raised like $4 billion at like under 1%, even though they didn't need the money. I don't remember exactly how much they raised. I feel like it was something with a B. Some amount of $1 billion at like a 1% interest rate. Where's Brant? I know Brant's got to remember that one, because I think his mind was blown with me. When this company already had so much cash. Why are they doing that? Just because they can. Because the money was free. Because they're like, we might as well just raise cash from the bond market and buy back our own stock with it. Right? So, I don't know. Is there a possibility that you see Apple, if the market goes into like a more major recession, or the economy goes into a major recession, Apple at $100? Yeah, it is possible. We need to be prepared for all scenarios. They're raising cash everywhere they can. But, I don't know. It's a big move. $6.5 billion, that's the accurate number? So Apple sold $6.5 billion worth of bonds, adding cash for buybacks. A 40-year deal with a yield of 0.92%. The longest portion of the offering was a 40-year security will yield 0.92%. Above treasuries. Got you. According to a person from who was asked to not be identified because the details are private, the initial price discussions were in the 1.15 percentage point range. Yeah, exactly. So, I mean, is this company going to go back to $100? Maybe. So save some money, save some cash, just in case it's down there, because then you got to buy it, I think. So anyway, as we kind of travel our way through the zoo here, I'm still really impressed with some of the buys that we were able to have today. And then even in the market, we did not do a good job capturing this to the downside. I blame myself for that, because I got thrown off between the common gap to the downside still being above yesterday's low, with the degree of the gap after yesterday's candle, plus OPEX coming into the end of the week. I really didn't think that a sell-off like this could happen today. Obviously it did. We actually nibbled on some great little longs here, and Pat was mentioning about how he was proud of the team for kind of going after those singles and doubles. The thing about these markets is, if you are going to buy, if you're going to attempt to buy, you have to buy on the way up. You got to get your risk covered. You got to get your stop loss in. That's what I'm talking about. So we took, this buy here off 11:30. This was actually a fake tail. So let me switch to the cues real quick. You had this candle come here at 11:30. I love this as a little buy. Small time frame buy, right? You're really just looking for a move to the 80 EMA. Maybe you get further follow through to as much as the 21 EMA if you're getting more of a 15-minute correction like we had over here. But you just destroyed this market. Hughes just went from $300 to $295.50 straight down, right? Almost a $5 straight down move in 30 minutes, right? 1, 2, 3, 4, 5, 6 5-minute bars of just red in a row, getting further extended. Then you get this little baby hammer that comes in. I can tell you why it's probably not going to be the low is because the volume's not here. But maybe, sometimes we get surprised with like a low volume pivot, midday reversal in the middle of the day. It happens. They're definitely lower probability. But you take this long with good execution, you get your stop in, you get your risk covered, you take more off in front of the 80 EMA. If you get the 15-minute correction, you take more off into the 521 or the 8 on the 15. And then you keep 10% of your position, maybe 20% of your position if you're greedy, just in case that retracement becomes a reversal. You liquidate the vast majority of that position into this move. When you get stopped out at new lows here, even in this case where all you got was a touch to the 80 EMA, and I was in this trade, break-even trade for me, right? You got to at least be a break-even trade, if not small green. And then we had a second long in here that actually did not work for the SPYs or the Qs, but worked for the IWM. That IWM low held, and then we had that inside 5 and up, which led to the 15-minute retracement. Same thing. And by the way, we also mentioned, I said it here and I said it here, I was like, guys, if this market is going to be really weak, that's all we're getting out of this bounce. And you could even look to potentially short it. So we did actually call out, though I didn't have conviction on it, a short off this high and a short off this high as we called off a low, a long off this low, and a long off of this low. So we just really good, nimble trading today. It's like, again, today was a disaster for the market. I really think that this was one of the worst days I've kind of ever seen. And I'm actually just really, honestly happy. I'm red today. Don't get me wrong. I lost money today. But I'm actually not upset about it at all. I'm actually kind of happy about it. I think I traded great. I was in the right things at the right times. My execution was good. My game plans were good. Happened to not get follow through on some of those trades. The teamwork here on the virtual trading floor was great. Great ideas in the morning meeting, great communication during the trading day, and for what turned out to be just an absolute brutal trading session, I think we navigated it extremely well. And I can't always say that's true, right? Like if you go back to like this day, I can't get this day out of my head, May 5th here, because this was probably a top 10 worst day of my career. Or just totally flat-footed after the strength of the Fed from the day before, and just got absolutely wrecked and couldn't believe what was unfolding in front of me, and I felt like I could not have navigated this day worse. Today was actually the opposite. I feel like we could not have navigated today better considering the hand that we were dealt. So it's just a really good job there from the team, and we have now reached the end of the zoo exhibit. And I am happy to turn it over to any questions that you guys may have as we prepare for what will probably be a gap down because of Cisco tomorrow. UA, CEO stepping down. Is this smoked after hours too? Bring it on, man. UA down, 10%. BBWI smoked. The Cisco guidance is so bad, though. This is the one that's scaring the heck out of me right now. I think that this target... I do think that actually some of what happened with this market today is really related to the Target whammy right after the Walmart whammy. Anyway, questions. Let me scroll up into the VTF here to about 410. See if I missed anything. I'll work my way down. Yeah, Pat had said that I really feel like this is more like the dot-com bubble unwind, and he was busy watching SpongeBob during those days. And I also, I actually had some positions in the market for that, but I was not like an active trader, right? I was a young guy, young kid, really, teenager, with some investments and, learning that stocks can go down. I remember being involved in Alcatel-Lucent. I think it was just Lucent at that time. In the tech bubble a little bit was totally not fun, but that's why I really enjoy. Pat, when you were gone, there were some charts that I was getting in through your resources that were comparisons of the ARK sell-off to the NASDAQ tech bubble sell-off. And I actually really like those comparisons because the one thing that I kind of agree with Kathy on is, she says that her ETF is the new and real NASDAQ. And maybe that's a little bit much, but there is, I think, a degree of truth to... I don't think that you can really compare the Qs in 2022 to the Qs in 2000. I actually think that it is a closer comparison to do a comparison of the NASDAQ in 2000 versus ARK now. And all those charts are showing that ARK here is actually, at this point in time from the top, a little bit worse off than the NASDAQ was back in those days. And that last comparison chart that I looked at a day or two ago, if we were to see something similar here with ARK, the bottom's not in, but we're like close-ish to it. And that's assuming that it works the way that it worked with the Qs, and this of course is a multi-year process. But the real top of the market in a lot of ways was, especially for these types of names, was February 21. So in that regard, we're over a year into it, but it still played out over the course of a couple of years, right? Where I think that like the next stage in the NASDAQ, if you were doing like an overlay, is actually like a pretty steep rally in ARK or the Qs at that time that then actually leads to new lows, followed by like another 50% decline. So like maybe we get the equivalent, it'd probably be the equivalent of us, maybe rallying back to like $60 for the Qs, and then making new lows and going to like 30 or a little bit below 30. And that's assuming that's going to play out in the exact way. The Qs and the SPYs are just so skewed by Apple and Microsoft, which actually I think these are more important. The Qs are more important again right now because they're actually really finally whacking Apple and Microsoft. But I don't think that the SPYs and the Qs have been a proper representation of the market because of those market caps and those stocks holding up the way that they did. I think that the IWM is. I think that this IWM is the most important index that we have to pay attention to right now. It represents your average stock a little bit more, down over 30% here at this low. But this has been what's led us down. I just went over this, right? Let us down, let us up, let us down, and now here recently, to me, this doesn't look as bad as the rest of the market does all of a sudden, because now they're starting to really, utilize your Apple and Microsoft for cash. And I still say what I've been saying. I think that the selling in Apple and Microsoft, and I'm not saying that the bottom is in. I'm not saying that. We easily can go lower. We probably actually will go lower. We probably actually will make even newer lows on the year. That's what I keep saying. But I think that them starting to go, oh my God, we got to sell XLP. Oh my God, we got to sell Apple. Oh my God, we got to sell Microsoft. When they're starting to sell this thing that was more defensive. And look, Apple and Microsoft, these became defensive purchases for the market at a certain point, right? Like in January here at certain points when you'd be looking at some of the growth stocks that were down massive, and you're like, oh, but the market's not down that much, and Apple's still holding in really well. It's just people were going to this as for defense, and now they're like, oh my God, we got to unwind our defense. We need to raise that cash, and that's I think why you're seeing this XLP and Apple sell off. With all of that said, while I think that the market's gotten cheaper, if these earnings guidance expectations keep getting missed the way that they've gotten missed in Walmart, Target, and now Cisco as examples, that is how the market gets significantly worse. That's what I've been saying. Like we went over this I think on Monday morning after I did a lot of research last weekend. I think that if you think that the Fed can engineer a soft landing, that we're pretty close to lows. If the Fed is unable to engineer a soft landing and we go into a recession, and again, we have to see what that recession looks like because not all recessions are created equal, but we start seeing real deterioration of earnings, which is maybe what some of these earnings reports guidance misses are actually showing us, that's how you can still go significantly lower from where we are. So soft landing, I feel like we're almost there. Hard landing, then, that's the scenario where you will see Apple potentially get to $100. All we can do is take it one day at a time. Today was definitely not great. Penny saying, I think, a great comment here. These old line experienced management teams are going to start getting really conservative on guidance, spending, hiring, etc. With a recession or potential recession looming. It's the right thing to do. I agree with you 100%. Market certainly doesn't like it. Robbie letting us know that the Target CEO pre-market said their income was down $1 billion due to high transportation costs that they had not passed on. Also notable. Josh saying that the internet is going crazy about a $30 million put position for 270s. I'm assuming Q270s. That strike for 270 strike that was open at 2 p.m. today. Fed's Harker says we got to bring demand down. I'm pretty sure that we did it. We don't, and then saying we don't want to overdo it, but we have to act. And this goes back to my thought process. I'm worried about the Fed overdoing it. I don't know why. It takes time for their actions to reverberate through the market. And I think that if you just increase 50 basis points, 50 basis points, 50 basis points, 50 basis points, back to back to back to back, we're not halting until we see the number come down. You don't give enough time for the data to actually play out in the market. Tell me there's no demand destruction from what's happening in the market. Tell me there's no demand destruction from the fact that the fixed 30-year mortgage rates above... Wow, just totally blanking on where it's above. That's gone up a lot. That's got to be creating demand destruction. It has to be. But I don't think that you're going to see that tomorrow in your data. And I understand you want to be data dependent, so let the data be able to play out. So that's really actually becoming my concern. Is that there's so much money coming out of the system right now. They're not giving us a pause to be able to see what it looks like as it comes out. And again, I personally, probably haven't been sounding this way, my personal thought process on what's best for the economy has tended over the course of the last 10 years to be a bit more hawkish than what the Fed has always kind of done. But now it's just the rapid pace of what we're doing right now when most of this comes from supply. Like, yeah, you're creating demand destruction, but you can't control the supply aspect of inflation, and that's where most of this is coming from. So give this some time to see how the 75 basis points that we've already done, the next 50 basis points that we're about to do, play out at the same time as we're hopefully starting to see improving situation come out of China on the supply side. Because what happens if all of a sudden the supply side comes online? And I know it's going to take time, 6 months to a year. But what happens if, we're 6 months down the road from where we are today, we're approaching the end of 2022. Supply has fully come online, and we've just hiked ourselves to a point of demand destruction that's recessionary, and you could almost have an imbalance flip, right? Where all of a sudden all the supply is now produced in here because there's so much demand for it, and the suppliers are playing catch up, and but now the demand destruction is totally gone. You got a whole nother situation. Why not be patient and let the data actually play out to be able to see? And I think the Fed realizes that now, because I know that if you just read a transcript and there's been a little bit of a debate here in the VTF on if Powell's comments yesterday were hawkish or dovish. I usually don't listen to the guy. I usually actually just read it. And I think if you just read it, it probably sounded pretty hawkish. If you listened to him, I actually thought he sounded and was leaning more to a dovish tone on the way he was expressing himself. And I feel like we're starting to see that from some of these other Fed members also. So they're not at the Fed put point yet, I guess, but they got to be looking at this and becoming a little bit nervous on what's going on here. I don't think that the Fed are stupid people. I really don't. They're very smart people. So they got to see what's going on here, and I don't know. I just wish they would just be data dependent, like they say. Anyway. I don't even know if I want to read Josh's comment. My words of wisdom for the day are from Chris Rock. He said he was stuck on the road and complaining. No one wanted to help him. When he realized the only option was to get out of the car and push, then everyone came to help him. No one will save you until you save yourself. Guys want my Bob Voigt, my Bob Ross imitation for the market. We'll save that for during hours. From Rich, do you think growth stocks will catch up with everything else, with everything today sell wise? That's the big question that I'm asking myself today. What does the relative strength mean to me as a trader that we saw in the growth stocks? There's two things that can happen. If the market continues to sell the way it did, if we get a day two, I think those growth stocks eventually got to get hit back down also. If the market actually stabilizes tomorrow, if we get a gap down tomorrow, which we're probably going to get, and we're seeing that like short-term sentiment indicator in that buy zone, which to us doesn't mean buy, it means don't short. But then the market, if we have a big gap down tomorrow, maybe the market catches like a little bit of an opening bid, kind of like what Pat was describing. If those growth stocks can show continued relative strength for another day, they could actually make great longs. The flip side is that they also have the potential to totally break down if the market just repeats tomorrow what it did today. So I'm not certain at this point. It's something I really am going to continue to eye closely. I think that I'm so incredibly impressed by how well, some of these things traded today that we identified in the morning meeting that are these garbage growth companies that are down 90%. They should not have. Most of any time over the course of the last 8 months, if you had the market down, you had growth stocks down by more than double. And that's just not what we're seeing all of a sudden a bit more recently, especially today. What will tomorrow be like on the other retailers? BJ reports earnings. I'm not sure if BJ reports tomorrow. We got to see. Or did they I don't know if it's BJ's number. They're just traded down 16% today on Target. Oh, my God. So you got to wonder if BJ's is tomorrow morning, maybe they're front-running this report a little bit. So we got to see what those numbers look like. If the numbers are decent. Remember what happened with Facebook and then Snap the previous quarter here in February? Facebook reported this awful earnings report. So they brought Snap down like 30%. Look at this. This almost looks like it's not real, right? Facebook reported the awful earnings report. They got this thing down. They brought this thing down, I think, 30%. Then they actually reposted their earnings report, and it ripped all the way back up on it. So I don't know what the BJ's report is going to look like, But if they front ran this thing, assuming the numbers are going to be terrible because the target is down 16% and it reports decent numbers, you could see this thing right back in the 60s tomorrow. Just a nutty market we're in. Top trending post on Wall Street Bets. The 2008 crash plotted against the current SPY. Dread it, run from it. Destiny arrives all the same. What? Well, that's actually really interesting if the Wall Street Bets community is starting to post about that. To me, that's got to be a bottoming signal of some sort. Sell in May and go away, yeah. You don't. So we definitely have bad seasonality right now. Also, I think May is usually a bad month for the market. October is usually a bad month. Sell in May and go away. I've definitely seen that play out over the course of my career, where the market just goes into summer doldrums and we're weak, and then we wake up in September, and then we're strong in November and December. I always take seasonality with a grain of salt, because April is usually the strongest month of the year. I think we just had the worst April like ever. January is usually a seasonally strong month. January was destruction. So we'll see. Is sell in May go away going to continue to apply today and this summer, which just adds to the weakness, or did we jumpstart that selling on other parts of the year where we're usually seasonally strong? I don't know. How far do you think is reasonable for a stock to poke through a key level on extension? Considering a passive order limit situation, giving it 0.3 cents leeway in case it pokes and still holds. Yeah, I don't like to do it that way, Cap Holmes. In that type of situation, if I think that's going to happen, I would rather get stopped out and then look to rebuy back through and let the market tell me what the low is going to be. I don't like playing that guessing game, because you're going to guess 30 cents, it's going to be 32 cents. So next time you're going to guess 40 cents and it's 45 cents. And I really don't like playing that guessing game. I want the market to tell me what to do. From Policing Pips, you think if we get another day or two big sell side, this could be a capitulation and eventually turn around, or will we keep grinding? Great question. Great question. That's been the thing that everybody's talking about here, is that, yeah, we got all this ammo out there, all this dry kindling that's out there that could lead to a bear market rally, but the thing that's been missing has been real capitulation. We haven't seen it. And I was thinking that too. When we're starting to see Apple sell off the way that it's selling off, again, Apple off 6% about today. No new news or anything. It's just the market normal that we're in right now. Gotta be thinking that we could be getting closer to a capitulatory event. So I'm definitely keeping an eye out for it. Definitely keeping an eye out for it. I agree. From Kevin Ruiz. Would you say that the true bottom would be when the Fed calls for a pivot? It's a great question. It doesn't have to be. It doesn't have to be. It's either when the Fed pivots, could be, or it could just be that when the market actually gets to the point where enough buyers versus sellers actually think that things are cheap and say, you know what, I can't sell this thing anymore at a 15x multiple. And as a matter of fact, and then other people are going, you know what, I got this cash put aside, I gotta be a buyer here at this 15x multiple. These prices are just too good. That's how the market does it without the Fed. We've just become so Fed dependent. The longer I've been in this business, and I know it's true from before I was in the business. It's all about the Fed to such a large degree. At the same time, you can still point to when we were reducing the balance sheet by about $1 trillion back in 2019, and that the market was able to still be extremely strong. You know, so it's about how they do it. With the way that we're doing it right now, with the violence that we're doing it with the Fed, it's not enough for the market to be able to absorb. You know, if the Fed's not going to be accommodative, it can't be the opposite. It needs to reduce its accommodation by the amount in which the market can withstand with kind of more natural forces. So we'll see. Stefan's saying we need to produce more. We are short homes and energy. Yep. Good luck right now if you're trying to buy a house. If you didn't score a house when the interest rates were low, preferably before the latest housing bubble or run or whatever you want to call it just happened, you're like so screwed right now. I'm sorry. Anybody here who's like a 23-year-old on the team and hasn't had the opportunity to be able to buy anything yet, this is like such a bad time for you to try to buy a house. You're totally screwed. I'm sorry. You're paying way more on the interest rate. You missed on that, but the prices are also ridiculous still because there's just not enough inventory for it. It's tough. Blaine saying that consumer cash is draining. It is, but it's draining from historic levels. Stefan saying that 2008 was so different. That was an unwind of leverage, much more nasty. And I 100% agree with that also. And that's one of the things that I'm keeping in the back of my mind, right? I love looking at history in these types of environments and understanding the history of bear markets and how they've kind of played out over time. And that leads me to a couple of potential conclusions. One is I think that this bear market is a standard historical bear market. This is not a financial crisis. This is not the Great Depression. This is not even the 1970s as far as, the 1970s, I was just doing some research over the weekend. Did you know that the multiple of the market got to 8x? 8. That's because why would you buy a risk asset when you could buy something that yields 20% just through interest, right? But I mean, the interest rates that we're at right now, and that even what we're heading to, like we're trying to get to zero on a real basis, which I know inflation was crazy back then, but like the interest rate getting to above 20%, like getting a 20% return on your money for not having to be in a risk asset, I probably wouldn't be in the market either at that point. I'm just gonna buy those assets and just you could make a living off of it. So this to me is more of still a standard bear market, and I don't know off the top of my head the statistics on mean and median when it comes to bear markets, but you're looking at 20, 30, maybe 35% is probably what we're going to be looking at here. But I also don't think, like I said previously, I don't think this is a V-bottom bear market either. I think that this is also like what we saw in 2018, I think was it? And in COVID, where you had a Fed pivot that created a V-bottom, and within 12 months we're making new all-time highs. That's not typical either. I don't see that happening here. I think that we're in for drawn-out price action that could, very, very big picture, be kind of range-bound where, maybe at the end of all this we are down 35%, but there's fits and starts along the way, and similar to what we've kind of seen here, right? In this market environment, and it actually leads to a really good trading opportunity. I think that if you're a brand new trader, this is a difficult environment because you're dealing with so much volatility. But if you're an experienced trader, this has actually been an environment that has really provided us some major key opportunistic moments that have led to huge profitability. And we've caught them as a team consistently. We caught the January low. We caught the February low. We caught this whole March low. I personally, crushed this move. This could maybe end up being like my year of a move, like right here, just from that. Like those opportunities are still presenting themselves but I'm not going to say that it's easy necessarily, especially if you're new. It's just that we got a good team here. We understand the market dynamics. We understand the statistics. We understand how extension works. We understand when to become more aggressive. And by the way, when most recently did we become more aggressive again for the first time? On this low, through Friday. And we caught, I know personally that this move here was a very profitable move for me. So some of these names that we called out that I personally got involved in, you know, the SoFi off that earnings report down here at 5, where I got heavier again. You know, the We down here off of its earnings report at 5, where I also got heavier again. I mean, this is a 40% move. You got stock for this, you know, like those are opportunities to make real money. And it's not the end of the world if we can't get a V bottom and the Fed doesn't come to the rescue and we deal with a lot of this type of price action, because yeah, you know what? On your typical day here, point to just, you know, if you just close your eyes and point to a trading session randomly, it's more likely that you're looking at a difficult day than an easy day. But when the opportunity actually does line up, which has been a little bit rarer, but maybe it's been like a, you know, once a month type situation here so far for 2022, where you can position yourself for a multi-day move that just pays you extremely well. When it's there, you can make a lot of money. So I'm not coming here, as a matter of fact, not only am I not saying it's easy, I think that if you're a new trader and you're new to this business, it's actually very difficult, because the volatility is just so crazy. Things are so fast. I mean, the moves that we're seeing, guys, like, again, for anybody who's new, it actually blows my mind that some of you guys haven't seen a VIX, like, 12 environment that we kind of dealt with, you know, for a while. When we were having the opposite problem. Right now we're complaining, not really complaining, but we're like, oh my god, these moves are just so insane, how big we are up, how big we are down, etc. You guys missed the environment where we're just like, oh, another day where we gapped up and went sideways all day to digest the gap up. And then the next day it's like, oh, we gapped up again, and now the market's moving sideways all day, digesting the gap up. And the moves were just happening overnight, and that was it. And, you know, made for actually decent swing trading environments, because you would just, you know, kind of ride that gap up every day. But this is a different type of opportunity here, where you can get 40% moves in certain things in 4 days, you know, and that is opportunity to be able to make money. And I really do think that this is more of just a typical type of bear market that we're in, more of a historical norm as the market is righting itself from, you know, what happened more recently. October, this is one of the particularly dangerous months to speculate in stocks. Yep, for sure. Others are July, January, September, April, November, May, March, June, December, August, February. I'm assuming that's every month. From Mike here saying, I think that the market will bottom when all the new traders from the last 3 years get washed out and leave. Then we go up without them. I read some data over the weekend on Robinhood users that I thought was actually really interesting. I think that we're seeing a different kind of capitulation with those types of traders than what you might expect. And based on my research, actually, there was similar things that kind of happened in the tech bubble as well. I think that your Robinhood person who is involved in something and is 75, 85, 95% against them, they're not capitulating by selling anymore at this point. They're capitulating by just saying, you know what, I'm not even going to open up my, you know, they probably went from opening Robinhood 7 times a day to opening it once a month and just saying, you know what, I don't even want to see it. I don't even want to see it. I'm not going to go in and sell it, because why would I sell it? You know, my $10,000 is worth $700. Why am I going to sell? I'm just not going to sell. Like, there's no money left anyway. What's the point? Like, it might as well be a zero to me. I think that that's what we're seeing. It's a different type of capitulation. It's just like it's despair. I think that's more of what we're seeing. At the same time as I say that, are we still seeing like inflows into ARK? Because, you know, that would be a counter argument that you can make on what I just said. From Ben here, Was there any thought to go short after that 11:30 and 12:30 pivots failed? Yeah, and I said it. I said it. I know. I don't think I said it with conviction. Um, I was like, if the market is really weak, and I remember capitalizing really on both occasions, we could just pivot back down here. And I think I said, you also could potentially look to short on these moves. So there was a thought process on that. For me, like I said, I don't think, while I actually think I traded really well today, I guess could have been much better if I recognized early to actually start hammering the short side of the market, which I just didn't do. Um, so yeah, I kind of did, right? The same spots where if you were long off these spots, you want to be booking profit. Why are you booking profit? Because this is the area where the market should pivot and make new lows. So if you're seeing that pivot come in, you can take the short. The issue that I'm actually seeing here, though, honestly, is I don't see the execution setup. I don't see the upside tail that's an execution setup to be able to put the short on. You know what I mean? Which is what I like. You know, you expect the trade to come in, but you still need the actual execution setup in order to do it. Been saying that my game planning and calls are great. Personally, give me better perspective. Even if I'm taking the other side of your trades at times. Yeah, I mean that's what creates markets. From Benjamin, we got Benjamin now. New to T3, and I'm thinking that the markets might end up giving back all the COVID gains. Well, they did in the IWM. That's been one of the big points that I've been trying to make. And I think the IWM is the most important index right now. IWM 170, we are back at pre-COVID levels. They've given up all those gains. That's your average stock. The question is and remains, and we've talked about this, I know you're new, can SPYs and Qs do it, or are they, in air quotes, different because of what they're composed of? The SPY always seems to be the benefactor of rotation. So if you've got, I know XLE is a small part of the S&P at this point, but if you got XLE still holding up, if you got XLP holding up, which I know they trashed this today, if you got XLU holding up, which it actually held up okay today, that's always going to give at least some benefit to the SPYs. Your Apple and Microsoft is always giving a big benefit to the SPYs and a big benefit to the Qs. And Apple and Microsoft, they've just been such defensive stocks with the companies buying back the stock that it's having a huge difference. So if you think that the IWM is the more true representation of the market, then we're already there. That's why I keep saying I think that the space between 160 and 170 is massively important, huge support for the Russell. Yep, I'd rather diamond hands. Ben S, just you know where to direct them. Derrick the Trader YouTube, ProDesk Virtual Trading Floor. Give that Derrick the Trader YouTube a subscribe. I still want to try to build that up. Make me as popular as the charlatans who are pumping their own stocks and not providing real information. I know it didn't have that shooting star tail, but I was using 821 moving average for execution. Yeah, so my problem with that is that I don't think that moving averages are support and resistance. I think that they're tools. And sometimes you do see the market perfectly hold them because the robots have been built to sell on those prices, to sell on those lines. But they're too sloppy. Like, even here as an example, you could have started shorting right here because we just snapped back to the 80 EMA. This one snaps back to the 21 EMA. How do you know where the pivot's going to be without the execution setup, right? Because you could pivot in front of the 80 EMA. You could pivot into the 80 EMA. You could pivot into equilibrium. You could pivot into the 21. You could even pivot above the 21 and still go down. So if you start your short here at the 80 EMA, and this happens to be the pivot that snaps above the 21 and then comes all the way down, you're right, and you might not be able to hold through it. You might take a loss. So that's why here is the area where I want to look to see a signal to short. Here's the area where I want to look to see the signal to short. I still want the actual signal to be able to execute. Thoughts on AMD? Yeah, this AMD is so crazy. This thing was trying to be relatively strong again. Broke yesterday's high. Looking great. Eventually the market got to it. I don't like AMD being below $100. I also can't be too upset because the ADMA was at 95 like we talked about in the morning meeting. So let's see if it can make a higher low in this area and get back above 100 bucks. A little market help needs it. You can also find Derrick at the Hype House for YouTube influencer. All right, gang, I'm going to wrap it up. What? Rowan, that's you? Rowan. I can't with you recently, Rowan. I love you. You're out of your mind. All right. I'm going to wrap it up here, guys. It's after 5. I got to jump. Heck of a day today. Let's see how we gap tomorrow. Based on these after hours earnings reports, it's looking like we might gap down again. We'll do our research in the morning. We'll prepare ourselves. We'll get ready for the day. And that's it. So have a great night, everybody. I hope you enjoyed the walk through the zoo.